Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Kickstart video for May 31st, 2024. When I took a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. We just saw the US PCE data come out. The month-on-month came in at 0.2%. The year-on-year was as expected, as was the headline numbers. If you take a look at the month-on-month, unrounded, it came at 0.249%. That rounded the number down to 0.2%. So it looks a little bit better than it is, but it was actually just in the middle of 0.2 and 0.3. Nevertheless, it's 1 month where the Fed can say, okay, we have one month of data. We'll see if we can string together a couple months more after this, and see if we can cut rates down the road. That is to be determined. Taking a look at the U.S. dollar, the dollar is lower. We are seeing yields move lower a bit. We're seeing the 10-year yield currently trading at 4.51%. That's down 4.4 basis points, and it's helping to propel the dollar to the downside. Let's take a look at the technicals now. We're driving these major currency pairs. We'll start with the euro versus U.S. dollar. Looking at the hourly chart of the euro versus U.S. dollar. In trading yesterday, what was key? There was the price moved up to the 100, 200-hour moving average. As I said, we would expect sellers against that level in this morning video yesterday, and the price, in fact, did move lower into the close, and then continued to move to the downside, but found early buyers against the 100-day moving average, and we started the rotation to the upside in the European session. That move took the price back above the 100 and 200-hour moving average, and that propelled the market higher, and then the data can't push the price even higher. We're back up into this swing area through here, which comes between 1.08758 and 1.0887. Above that is a high price from May, which came in at 1.0894. If you recall from earlier this week, the price did move up toward that level, breaking above, moving above barely the high of the swing area before rotating to the downside. So getting above those levels would increase the bullish bias. Taking a look at the 4-hour chart to see where that takes us. Looking at the 4-hour chart, these are the levels from this week and for the month of May. Getting above the 1.0894 level increases the bullish bias and have traders looking toward probably around the 109.18, 15-ish type level on the top side. Might have some resistance at 1.09, of course, as well. But you can see the importance of this swing area through here up to the 1.0887 level. Getting above that level is going to be key today and going forward. We may even see sellers against this level to push the price out back to the downside. Remember, the ECB meets next week, and they still are expected to cut rates by 25 basis points, despite what was a little bit higher than expected May CPI data today. So be aware of that. The ECB officials are saying that is still in play, or the cut is still likely. Let's take a look at the dollar versus yen. Taking a look at the 1-hour chart of this currency pair, we moved up in the Asian session to test its 100-hour moving average. That's the blue line in this chart. Found willing sellers against that level, so sellers were more in control. And then we moved back down to test this swing level, which corresponded with the recent swing lows. Admittedly, yesterday we moved below that level. We should have gone lower. We also broke below the trend line here, but that was quickly reversed, and the price started its rotation back to the upside. These are the levels, lows right here, forming this floor here. And so you can see the importance of it, but then reestablish support. In the trading here today, we found support against that level as well, and that started the rotation to the upside. Since the data, however, we've moved back below the 100-hour moving average and the 200-hour moving average. But now the trades in between these two moving averages. So there is a battle going on between moving above the 100, moving below the 200. We'll see how that plays out in trading here today. But those are our barometers for traders today. Overall, the price action this week is up and down. As you can see, we did extend higher to the upside, but then came down in trading yesterday, reaching our low for the week. So we are trading sort of in the middle of that trading range. So, just up and down trading as traders try to figure out the next move in this currency pair. Finally, let's take a look at the sterling versus US dollar, and we'll focus on the hourly chart as well. And as you can see, the price low that we saw in trading here today did find support against what was, what I had earmarked as a swing level going back to this day right through here at 1.26 nicely near 127. We found support buyers against that level. I talked about that level in videos. And then the price moved above the 200 and 100-hour moving average off the data, trying to stay above the 100-hour moving average at 127.413. Will keep the buyers more in control. If you want to use if you're bullish and you want to use the 200-hour moving average as support, you probably don't want to see the price move below that level. If it does, there would be disappointment on the break to the upside. On the top side of the next target, if we use this high as a level of resistance, we can use this high, or this high as a level of support. We can use this high as a level of resistance. That level comes in at 1.2759. And get above that level, it opens the door for further upside momentum. So that's my technical look at the three major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune to trading. Bye-bye.